Good afternoon, everyone, and welcome to our webinar, P11D Benefits Breakdown, where we will discuss the benefit types, year-end tasks, and deadlines for P11D and payroll benefits. A common saying in payroll is that you don't get something for nothing, and that perfectly sums up how benefit works. And with the benefit season just around the corner, the next few months will be extremely important. Being well prepared will help you navigate the process of preparing and submitting your benefits to HMRC. For those who don't know me or haven't attended one of our Power Hours before, I'll introduce myself. My name is Larissa, and I'm a Senior Customer Care Representative, helping customers navigate our system and address any legislation-related questions. Another aspect of my role is supporting the payroll team and working closely with the product team. I'll pass over to Akash to introduce himself.
Hi everyone, and welcome to today's Power Hour. My name is Akash, and I'm excited to be speaking in my first webinar. While this is my first time presenting, some of you may have heard of me answering questions during our previous Power Hours. A little bit about myself. I'm the payroll team lead for the customer care team. I support our representatives in providing expert advice on both app functionality and payroll legislation. I also help tackle complex payroll queries and work on future payroll-related initiatives to improve our processes and services. We'll also have a live Q&A at the end of any questions we haven't been able to answer. I'm looking forward to today's session, so let's get started. Back over to you, Larissa.
Thank you. We will guide you through common benefit types and liabilities, best practices for processing benefits while respecting HMRC deadlines, and upcoming changes as we head into the benefit season and the new tax year. We will also discuss different methods of reporting and provide you with actionable insight to ensure that HMRC deadlines are met and all the information is processed in the correct tax year. But let's start with the beginning and explain what is a benefit. When we think about the employee compensation, the salary is often the first thing that comes into mind. However, in today's workplace, many companies will go beyond just offering a monthly salary. They will enhance their remuneration packages by providing additional benefits, also known as perks or compensation, alongside the employee's regular pay. But before we dive into the details of reporting, it's important to note that not all forms of pay are considered benefits. Standard earnings like bonuses, commission, and overtime are taxed as income and do not fall under the benefit reporting rules. For a deeper understanding of what is a benefit, we will discuss some of the most common benefits that companies are offering. The most popular one is the private medical insurance. Private medical insurance covers not only the private medical insurance scheme, but also health cash plans, critical illness insurance, dental insurance, and more. Employers might offer to include the employee's dependent in the scheme. In this case, the employee typically makes an additional contribution towards the cost, where the contribution will be paid by the employee. Company cars and fuel. The taxable benefit is calculated based on the number of calendar days in the year that the employee had access to the car, as well as the car's list price, CO2 emission, and fuel type. If free fuel for personal use is provided, an additional fuel benefit will also be calculated. Loans and interest-free benefits. If an employee has a loan over £10,000, that isn't a commercial interest rate, it must be reported. Vouchers are a popular employee benefit, but it's important to understand how they are taxed. Meal vouchers and cash vouchers are two types of benefits that you might want to give to your employee. Most vouchers are liable to tax, and in some cases NIC. Although popular, they're easily missed, so it's important to remember that both types of vouchers should be processed within the tax year for compliance purposes and for NIC to be paid where applicable. Some other benefits include a gym membership, which is taxable and subject to Class 1A national insurance, tax schemes, or accommodation and staff entertainment, which can also be taxable depending on how they are provided. So now that we discussed the different types of benefits, we will move on to the next section, which is about reporting them. When it comes to the actual benefit, employer must report them to HMRC using one of the three methods. The first one will be payrolling benefits, where tax is deducted through the payroll in real time. Second one will be the P11D form, used to report benefits that haven't been payrolled, or a PAYE settlement agreement, also known as PSA, which allows employers to cover tax on minor, irregular, or impracticable benefits on behalf of employees. We'll explore each of them in more detail, including deadline and best practices in the next section of our session. I'll now hand over to Akash, who will discuss in detail each method of reporting.
Thanks, Larissa. No matter which reporting method you use, preparation is key. One of the most important steps is to request your benefit statements early from a benefits provider for the tax year. Unsurprisingly, this is a very busy time of the year for benefits providers, and it can take time to receive a statement. For each benefit provided, you should receive a statement detailing the employer's cost, and in some cases, an employee's contribution, especially for dependents or shared cost of benefits. Having this information in advance ensures accurate reporting and compliance. One of the most well-known and used methods for reporting benefits to HMRC is through the P11D form. This is an employee-specific form that details all benefits received throughout the tax year. It also includes any contributions made by the employee towards those benefits, known as amount made good. These are deductions taken from the net pay, meaning the employee has already covered the tax on that amount, which reduces the overall benefit amount by their contributions. Each P11D must be submitted to HMRC along with a P11DB form. The P11DB reports the total value of all benefits provided across the business and calculates the employer's Class 1A national insurance liability. P11D data can only be submitted electronically since the 6th of April 2023. HMRC no longer accepts paper returns. These can be done via your PAYE online service or using your payroll software, such as PayFit's. Once HMRC processes the P11D, they adjust the employee's personal tax allowance and issue a new tax code. However, because P11Ds are submitted by the 6th of July after the tax year ends, employees don't pay tax on these benefits until the following year. For example, an employee received £300 worth of benefits in 24-25 tax year. Their standard personal tax allowance will be reduced in 25-26 by £300 to recover the tax due for that benefit. HMRC will issue a revised tax code in 25-26 tax year after following on from the July submissions. Most benefits are also subject to Class 1A national insurance, which is an employer-only contribution. This is calculated at the rate of 13.8% on the value of the benefits provided. While the P11D process is a widely used method, it does delay tax collection for employees, which is why many businesses are moving towards payrolling benefits for real-time accuracy. One of the biggest challenges when submitting P11Ds on time is waiting for data from benefit providers, whether it's private healthcare, company cars, or other taxable benefits. Key steps to staying on track are: request benefit statements early, ensure you receive all the necessary data from the providers before deadlines, reconcile your payroll records, so cross-checking benefit values against payroll deductions to catch discrepancies early, ensure you are also checking employees that have left within the tax year. Track mid-year changes. Has an employee received a new company car? Was there a renewal for PMI partway through the tax year, which requires an uplift? These updates must be accurately reflected. Report certain benefits within the tax year. Asset transfers, loans, vouchers, and credit cards need to be reported in the correct tax year as per HMRC guidance. Process early contributions correctly. Before running your March payroll, confirm that all deductions for benefits, both for employees and dependents, have been applied correctly. Additionally, ensure correct deductions are made when an employee is leaving. By being proactive and verifying data early, you can minimize errors, avoid last-minute corrections, and ensure a smooth P11D submissions process. A common mistake when submitting P11Ds is overlooking employees who have left during the tax year. Even if they left months ago, if they received a taxable benefit while employed, they still need a P11D. Key steps to avoid issues such as these: check employee details before submission, ensure their home address, national insurance are up to date, provide their P11DB. If they've left, you may need to send it electronically if a paper copy isn't possible. Otherwise, they can contact you or HMRC directly. Keep accurate records. Tracking benefits throughout the year ensures a smoother process at year end. Some key deadlines and important deadlines are: deadline to submit P11Ds to HMRC and provide copies to employees is by the 6th of July. If you owe Class 1A national insurance, payments must reach HMRC by the 22nd July, or if you're paying by check, by the 19th of July. HMRC may issue your business with fines of £100 per month you're overdue for every 50 employees. Also, if you have made a genuine error, you can fix this by completing a P11D or P11DB correction form via your PAYE online services. A PAYE settlement agreement, or PSA, is a way for employers to report and pay tax on minor, irregular, or impracticable benefits or expenses on behalf of their employees. Unlike other benefits, the employer covers both the PAYE and Class 1B national insurance contributions. Minor benefits could be small gifts or vouchers. Irregular benefits could be occasional perks like Christmas party for all staff. Impracticable benefits, costs that would be difficult to attribute to an individual employees, such as expenses for a group attending an overseas conference. Employers often use PSA to prevent an employee's benefit from being diminished by tax. For example, if an employee receives a gift, covering the tax via a PSA ensures they get full value. Some of the key deadlines and processes. Submitting a PSA is done via HMRC's online services and not through the payroll software. Again, the deadline for paying the associated PAYE and Class 1B national insurance is the 22nd of October, or if paying by check, the 19th of October. Remember, this is different to the P11D process dates. While there is no fixed deadline for submitting a PSA, the payment deadline means it should ideally be submitted by the same date to avoid penalties. Up and coming changes to the P11D process. In January 2024, the government announced plans to make payrolling of benefits compulsory from April 2026, replacing the traditional P11D reporting method for most benefits. This marks a significant shift in how employers report benefits to HMRC. What does this mean for employers? Real-time taxation. Employees will pay tax on benefits as they receive them, rather than through a tax code adjustment in the following year. Most benefits will no longer require end-of-year reporting via P11D. Employer and software preparation. Payroll software providers and employers will need time to adjust to the new process. There are still a few unanswered questions HMRC are yet to provide. HMRC have said it plans to work with industry stakeholders to produce implementation guidance for employers on payrolling of such benefits. However, there are still a fair amount of questions which are unanswered. Things such as, will all benefits be included in payrolling, as currently there are a few which cannot be? How will the transitional agreements work? Will HMRC allow for phased implementation? HMRC is expected to provide further updates soon, so we recommend staying informed and preparing in advance, where possible. With many details still unconfirmed and stakeholders requesting enough time to implement changes, there is always a possibility of delay as processes have yet to be clarified. Now we move on to payrolling benefits. Since April 2016, HMRC has allowed employers to payroll company benefits, making it easier to manage taxation in real time. This means that instead of waiting until the end of the tax year, benefits are included in an employee's taxable pay each pay period, and tax is deducted through the payroll just like salary. Employers then report this to HMRC via the full payment submission, which is due on or before payday. How to register for payrolling benefits. To payroll benefits, employers must register through HMRC's online service before the 5th of April, before the start of the tax year. Once registered, you wouldn't need to submit P11Ds for those payrolled benefits, except for any that cannot be payrolled. There's no need to re-register each year, as HMRC assumes you will continue unless you actively deregister. Although a P11D isn't required for payrolled benefits, employees must still receive a statement detailing their benefit values. Also, if a company car are payrolled, there's no need to submit a P46 car form. One of the major advantages of payrolling benefits is the employees pay tax on their benefits in the same year they receive them, avoiding tax code adjustments in future years. This makes tax calculations clearer and reduces workload at year end. Now, let's go over some of the crucial deadlines and key steps to ensure compliance when reporting benefits. Registering for payroll benefits. If you plan to payroll benefits, you must register with HMRC via the PAYE online services by the 5th of April before the start of the tax year. So if you were going to do that this year, you would need to ensure by this 5th of April you register, then you can payroll your benefits from 25-26. Employee notification. By the 1st of June, you must inform employees about which benefits have been payrolled, which haven't, and provide a cash equivalent for each one. Reporting during the tax year. Ensure all payroll benefits are accurately reported throughout the year, including for employees who leave before year end. Since tax is deducted in real time, correct reporting is essential to avoid errors affecting employees' tax payments. Processing employee contributions. Before running your March payroll, confirm that all employee and dependent contributions have been deducted for benefit schemes. P11DB submissions. Even if benefits are payrolled, a P11DB form must be submitted to HMRC by the 6th of July to report Class 1A national insurance contributions. Paying Class 1A national insurance contributions. These must be paid by the 22nd of July if using an electronic payment, or the 19th of July if paying by check. Most benefits can be processed through the payroll, but there currently are a couple of exceptions, such as living accommodation and interest-free or low-interest loans, which are subject to the beneficial loan charge. These still need to be reported via P11D, even if everything else is payrolled. I will now pass you back over to Larissa to discuss how PayFit helps with the process.
And I have some good news on that, is that PayFit can support both HMRC approved methods for benefits reporting, which is P11D and payrolling benefits. Benefits can be added monthly or annually, depending on how they are provided. These benefits will be clearly displayed on the employee's payslip, ensuring full transparency. We know that automation is key, so we understand how important it is to stay on top of the deadlines, which is why PayFit includes built-in reminders to keep you on track. Our app will prompt clients to confirm the type of benefits they provide and also remind them to deduct the employee contribution before the end of the tax year. With us, you can manage the submission for leavers with ease. Because a common challenge in benefit reporting is ensuring that employees who have left the company during the tax year are still included in the submission. With PayFit, leavers can be easily reactivated, ensuring no one is missed when filing the report. To give you full control over the benefit reporting, PayFit provides a dedicated section in the app where clients can adjust, add, and reconcile the benefit values, and detailed reports to help you verify all figures before the final submission. P11D and P11DB generation, it's automatic. So once submissions are confirmed, the P11Ds will be automatically generated and made available in each employee portal. The P11DB form will also be issued outlining the liability due and payment instruction. To prevent any late penalties, all submissions confirmed with PayFit's confirmed within the PayFit's deadline will be filed with HMRC before the 6th of July, ensuring compliance and peace of mind. With PayFit, benefit reporting is streamlined, correct, and stress-free. Our platforms ensures compliance while saving you valuable time so you can focus on running your business. As a final recap of everything we discussed today, some key points for a seamless process will be to obtain the statement from your benefit provider well in advance for the current tax year. You should ensure that the statement includes both the employer contribution and, where applicable, the employee or dependent contribution. You should make sure you process certain benefits within the tax year, such as assets transferred, loans, vouchers, and credit cards that must be reported within the correct tax year. Ensure they are processed before the end of the tax year or when the employee leaves. All employee and dependent contribution for benefit schemes should be deducted. And don't forget to report all employees who receive the benefits, even if they left the company earlier in the tax year. You should cross-check your benefit submission against the provider statement to ensure the records are correct. And lastly, don't forget about the deadlines. Submit before the 6th of July and provide employees, including leavers, with P11Ds or statements if you're payrolling the benefits. The deadline for paying the Class 1A NIC is the 22nd of July or the 19th if you're paying by check. By following these steps, you'll ensure a smooth and compliant benefit reporting process. We hope that you enjoyed today's session and found it informative. But for more reliable resources, we strongly recommend consulting HMRC guidance. Some of the most important guidance can be found in the articles we will share at the end of our session. I'll hand you back to Akash for our last part, the Q&A session.
Thanks, Larissa. I know we have thrown a lot of information at you in a short space of time, and I'm sure you have a few questions. We'll try cover as many as we can. If you have any specific questions, you are also able to raise these as a support ticket with your CCR. Our premium clients will also be able to book a Benefit Express session with myself to go over any specific questions your company, for your company benefits you provide in March. We already have some pre-submitted questions, which we'll be going through as well. So I will get started on the very first question. What is the difference between payroll voucher and a non-payroll voucher in terms of reporting? The difference is the way the tax is reported. The payroll voucher is calculated and deducted via the payroll and submitted via the FPS submission. Non-payroll vouchers are submitted via the P11D and collected via a tax adjustment. Class 1A liability by employees is collected via the payroll in both scenarios. Essentially, the result is exactly the same, however, the method differs. One of our second questions that we've also received, we have a tech/mobile scheme where employees can purchase equipment through a third party. The employer pays upfront and the cost is recouped from the employee via salary sacrifice over 12 months. This saves the employee NI. This will need to be reported on a P11D to collect the tax. What category of the P11D would this fall under? Any advice welcome. For this, I would need a bit more clarification on the question. on the question, for example, is the equipment in the name of the employee or the business? If the equipment is in the name of the business, once the loan is repaid, the tech becomes an asset transfer and is treated as a taxable benefit, either payrolled or reported on a P11D. Employers must also pay Class 1A NI on this benefit. Currently, there is a divide in which section this should be reported on the P11D. Some choose to add this under Section M, Other, and some choose Section A, Asset Transfers of the Asset Transfer section of the P11D. So in the example is if the business if the tech is in the business's name, it is then classed as an asset transfer. And then in most cases, people choose Section M if it's in the case of if it's in the name of the employees. Overall, both are correct, as both sections will be subject to tax for employees and Class 1A national insurance for employers. And I believe a number of people did ask about double taxation when moving from P11Ds to payrolling. I wouldn't class this as double taxation. One, because the tax being claimed via the payroll adjustment is for that period. So say last year. So let's say 23-24. And if you were to change to payrolling benefits, that tax is based on that. Yes, essentially they will be recouped within the same year. So it does have an effect on the employees, where they will essentially pay a higher amount of tax within the year the switch occurs. However, I wouldn't class it as double taxation because the tax is on benefits on 2 different tax years. However, these are some of the things we are still waiting on for HMRC to confirm if anything will be done about it. But clients who have voluntarily chosen to payroll benefits have also faced that. However, it's advisable that you speak to your staff with regards to the change that will take place in advance so that they can prepare as best as possible. Another question that we've had: would a workplace nursery scheme need to be included in the P11D process? So essentially, this depends on the type of scheme. HMRC allows a taxation exemption for workplace nurseries if they meet a certain criteria, such as being open to all employees and properly managed. It is best to check with your provider or HMRC on how this should be actioned. We've also been asked, do you need to submit a P46 if you're payrolling cars? The answer to that is no, you do not need to submit a P46 form to HMRC if you are payrolling cars, as they will be getting the electronic notice on a monthly basis. So they do not need a P46 form if you are payrolling. If you are still submitting P11Ds, you will still need to submit a P46 form when they do get the car. One of the other questions that we have is, how do we register to transfer from P11D to payrolling benefits? You can register to payroll benefits on the HMRC online gateway. So you can go on there and select that you would like to P11D benefits. When the time comes of when it's going to become mandatory, HMRC haven't clarified whether, well, I assume it's going to be an automatic switch, regardless of when the time comes. However, that information hasn't been provided just yet, so we're just waiting for further details from HMRC. But currently, at the moment, you do have to register before. And And our last question that we have is, how would you classify salary sacrifice for electric car vehicle benefits? So a salary sacrifice for electric vehicles is classified as a benefit, as although there is a salary sacrifice deduction for the car and reduces tax and national insurance, there are still, however, the company car remains a taxable benefit and is subject to Class 1A NIC from employers. So I see it as two separate bits. You add the salary sacrifice, you deduct that from the employee. However, because there is a taxable benefit on there, it will still need to be reported via a P11D or by payrolling benefits, so that the tax can be paid and the employer can pay Class 1 national insurance. So thank you very much for all your questions. Just a final note and reminder that we also have our end of year power hour hosted by Kay and Rebecca on Wednesday, the 12th of March at 2 p.m. So please do remember to register. And thank you for attending the P11D Power Hour webinar. We hope it has helped clarify the process of reporting benefits. If you have any further questions, feel free to reach out via a support ticket. Myself and Larissa really appreciate your time today. Thank you very much.
Thank you.